Good afternoon, traders. Welcome to the Moya Analytics Afternoon Energy Podcast for December 12th, going into the 15th. Hope everybody had a good week trading this week. Okay, in the natural gas. I warned in the post-market synopsis on Friday that this went out warning of pressure. We've come off over $1.12.4 from the 528.90 close up here. I also warned that a maintained gap lower would leave a minor bearish reversal above. We've come off over 849 ticks from the 501.40 open. And then we were bearish below this formation, at 496.60 and 490.30. And then the failure back below 458.50 here. I'd be aware of this formation down below. Comes in at 4.60 minus 0.4 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time. We'll likely see some sort of bounce off of there, but a decent break below there will warn of continued pressure. Maintain gap higher on Monday would leave a minor bullish reversal below. Okay, in the crude oil, a maintain gap higher on Monday will leave a minor bullish reversal below. The trade back below 59.98 is brought in 297 of pressure, and the trade below 58.83 is brought in $1.82 of pressure, with one chop around this line right here, and then a reestablishment of bearishness back down below it. If we were to trade above this line decently, that's going to warrant a decent strength. That's going to come in at 58.77 minus 0.5 of a tick per hour starting at 6 o'clock p.m. Decent trade below this formation down below. Comes in at 56.58 to 56.59 through Monday. That'll project this downward $5 plus, but we'd like to see a bounce off of that line of at least a half an ADR before breaking below it. Otherwise, if we go straight through it, the likelihood of it failing and coming back up through it is greater. And then if we see a decent break below and back above, then that would be an opportunity to be long. The RBOB, a maintain gap higher on Monday, will leave a minor bullish reversal below. We held exhaustion with a 195.17 high and rolled over 20.65 cents to the downside. We were additionally bearish below 189.98. Furthermore, the break below 175.59 to 55 now warrants a decent pressure. If we were to break back above there decently, that's going to warrant a decent strength. That's going to come in at 175.59 to 175.64 through Monday. The heating oil and maintain gap higher on Monday will leave a minor bullish reversal below. Trade below 234.12 and brought in 14.29 cents pressure and a little bit more than that today, with additional areas to be short below at 233.28. Decent trade above this formation right here will warrant a decent strength. That's going to come in at 227.41 minus 0.3 of a tick per hour starting at 6 o'clock p.m. In the Brent, Monday has a good likelihood of seeing range expansion. Trade below 63.37, brought in 260 of pressure. The trade below 61.58 projects this downward at $1.30 minimum, $5 plus maximum. You've seen 81 ticks of that so far. Decent trade back above where that line comes in at 61.64. Plus 0.5 of a tick per hour starting at 6 o'clock PM Sunday will warrant a decent strength. Gas, oil, and maintain gap higher on Monday will leave a minor bullish reversal below. Decent trade above this formation right here, which is going to come in at 636.52. Minus 34 per hour, starting at 6 o'clock PM Eastern Standard Time will warrant a decent strength, although that's not a very good formation, just barely makes it. Break above there decently, back down through it decently, look for decent pressure to come in. The cadence going into Monday is the heating oil is the weakest of the three, the RBOB in the middle, and the crude the strongest of the three relative to one another. Okay, thank you for watching. I hope you have a great weekend, and I'll see you on Monday's podcast.